Hey, Steve Zalunardo here. We're going to compact a 14-minute video that I just shot right now into 3 minutes, kind of giving you an idea what I was talking about on Monday regarding pricing, where we see them, where we were, where we are now, and where we see them in the future. We predict 20 to 30% decline between now and 2030, where we feel the dust will settle and things will start picking up at that point. But this is what we're trying to advise clients now. If you're into hard assets, sell them. Even if it's your primary residence, jump into a rental temporarily. Again, we don't make any money on the rentals, so it's not like we're trying to make the commission on it. Sell your primary, jump into a rental, and sit tight for a little bit until the market really declines as much as possible. Also, if you have hard assets like investment properties, unload them if they're replaceable, like we've been preaching the last 3 years. But let's look into this. So the 14-minute video is going to be more information regarding this. So in 2022, we looked at these properties in Valor Village, Cold Creek Estates, between 3 and 3,500 square feet, 4-bedroom, 4-bath, 41-foot lot with no unfinished basement. So we looked at the same property as a comparable. 2022, this property sold for $2,350,000. Let's fast track. 23, $2,050,000, same product, down 12%. That's 300 G's at $300,000 in 1 year. 2024, 1.7 million. That's 17% off the top of 2022. That's 350,000. 2025, that same property, $1,640,000 right now. So that's an additional 60,000 off of that. Total $710,000 off the top of the market. Okay. 2026 is where we're starting to predict. We basically ran a prompt model or prompt ChatGPT to run a pro forma based on all the information we have, not all the fluff that the media is producing through CMHC, the banks, and the news channels. We're talking like real deal investor information. And what it came up with is exactly scary, but it's the same concept of where we are, 20-30% loss. So 2026, same property, $1,560,000. 27, $1,476,000. 28, $1,394,000. 2029, $1,312,000. 2030, where we're supposed to settle, is $1,230,000. So that's 47% off the top of 2022, which equates to $1,120,000 less in capital that you would have had if you sold in 2022. This is why we're telling clients it's going to get worse. So where you might as well sell now, cash out, hold the money, and then buy back in and make your run back at the market. Remember, these properties were sold between 2009 and 11, I believe, for like $600,000 to $800,000. So again, still $400,000 above where they're initially selling for. That's why we're advising clients, sell what you got now. If you guys want to book a consult, get into a call with us. We can give you some instructions or information how to get out of this market and make sure you cash out, have this money in liquid, capitalize it, and you can survive, not survive, but you can thrive in today's market.